Welcome to this Bitcoin chart update for today, Saturday, 21st day of October, 2017. Welcome. Everything you do is within your own risk and your own reward. And when you're trading, oftentimes you got to be fast on the game. For example, this was a significant level of resistance. And when you've seen the strength leaving this 18 average, breaking such, you didn't have much time to get prices barely on the break of resistance. Didn't have much time. Also, if you wanted to wait for a pullback, well, there's a pullback earlier today, but yet we'll see the shorter term time frames, another V-shaped formation on a sell-off. Something that has been talked about for a long time on the web bot. That's going to happen a lot, where a lot of these sell-offs are going to be filled with rallies relatively quick. For example, this failed move, fast move, and I've talked about several of these on this channel. This one being no exception to the rule. See, in this case, if you're trading within this time frame, sometimes you got to be fast, and sometimes they give you so much time. This is giving you so much time. Because when you see a key break like this, you realize it's pretty much one of two things. Reversal of trend, or the typical failed move, fast move. Reversal of trend is usually when it resists this 18 average on the way down, or major further decline. And then failed move, fast move, like I've stated, quick move into the 18. It doesn't have to do a quick move leaving it. It can take a few periods after, but it left it and supported the 18 average of highs for 3, 4, 5, 6, 7, 8, 9, like 10 periods. That's like 40 hours, very close to 2 days of time, and realizing there was a major bullish setup. And although at the time not guaranteed to have a leg higher, it sure as heck was that of the most probable scenario outcome, compared to further range with this level being resistance, or of course a pullback, which would be a losing play to buy there. Another thing worth mentioning as well, and I'm now seeing this 2 in a row now, is whenever you have a very good rally, that's a qualification for a leg higher. If you don't find your support where you came back from, and it's higher, it's pretty darn near strong. Break resistance, key leg. This is noticeably higher than this resistance. With that being stated, however, when you have a significant gain higher, then it's more acceptable, more apt to be looking for your higher low to be above resistance. Here we go again. Resistance. As I stated, lots of opportunity time. There's your rally. You know what? Nothing too magnificent, but qualification, good enough. It counts. Nothing great. Probably, actually, to be honest with you, it's but the minimum that I would want for a high in here. Because if it only goes up to here, that's barely a break above. So the minimum leg higher, this move is necessarily not over. I'll consider this bull run higher when the 18 average starts to flatten out or go lower. But this retracement today, and we're going to take a look at this soon on the shorter term time frame, is noticeably above this high. This is the time frame in which shows it the best within the 18 average of lows. So maybe a little shorter term would have hit the 18 average of lows perfectly. But when we take a look at this in a much, much shorter term level, and we're going to finish this off by this bullish pattern. You have this move come back to this bull retracement, and we see how the green candle is moving up. I mean, it's showing a beautiful breakout pattern or continuation of the breakout pattern to be in play. And within the 5 minute, there's the move down lower between 1630 and 1800 UTC, and the V-shaped pattern formation, I think I was trying to state. But from this low, very quick move to the 18 average of highs, and even though it pierced below it, it did support the correctionary phase. Then when you see it getting above like this, I mean, the alarm bells are already off. It's doing what it's doing. I mean, this is what I was expecting to. Because when this thing was falling, that's all I was thinking. I don't know when it's going to bottom. I don't think it's going to start a bear market. It's probably going to rally fast, and sure enough, it did. So here's a nice little correctionary move on this point, and that's an interesting stage because in here, you're even in a bearish trend. This situation here, when I say something's bullish or bearish to happen, when you're buying down here, I would tell you it's both bullish and bearish for price action to meet up with a declining 18. On a bearish level, what it's going to do is resist it somewhere, maybe in here. If you see, for example, see this green candle here, red follow through. If it's going to be bearish, you're not going to have a green candle like this. You're not going to break this resistance, and you're going to have a curve lower of some sort. If it's bearish, if it's bullish, well, we're seeing what's happening right now. And then again, another leg higher, breaking this resistance, and what its current stage is correcting the rally within this 18 average trend. So it's sort of like correcting through time while it's grinding the price higher along the way. If the 18 average continues to rise and price action stays within it, that's another measure of grinding the gains of just small amounts here and there. Of course, you establish resistance at different points. It's already been done. And here, you come up to this point, back to the 18. Have a break a few periods ago, pierce above, but same ballpark area. And back now to the band. So now it's a twice hit area that's had a pullback. Even on a further scale, this little level of resistance in here came from this low. We can see within the candles that it came here and back again down towards here. So this little bit of a range here, we can tell short term when you see a pattern like this is very big. And then when I'm looking at stuff like this, I think of, okay, we're still in the correctionary phase, holding a trend line in this type of area, also holding any kind of trend line like this as well. With the nice, beautiful rising average, a few tests of this, it probably seems most likely, the likely scenario is you would have a break. I don't want to say that word over and over. You have a break of that 6120 most likely, and the place in which you would have a rise to for the likeliness is in towards this previous high in here. This is, of course, I think the all-time high. And we'll finish it off within the 50-minute time frame. And yeah, this is the all-time high in here. When I look at a chart like this, some of the things that I can see just really quickly. I see charts all the time. Experience is why I see this. Any move up here, because it's had a significant place towards here, again, it's now both bullish or bearish to pull back. I've already explained the two scenarios. On a bullish level to pull back, you got a pretty decent congestion area. There's a decent chance that if it has a rally, it's going to maybe have a pullback, maybe down towards here. And on a bullish level, it's just going to break resistance. Either way, whether it breaks resistance immediately with little or no resistance, or if it does what I just explained just recently, on the break of this level, when price action is around 6,200, then we're experiencing new highs after an event of a big correction. And there's a big difference in experiencing new highs after some sort of time correction, whether it be for just even a few hours, a day or so, a few months, or a few years. You're going to probably have significantly nice moves on the break. Another difference is when you make new all-time highs, like saying here, you only have an okay pullback where the 18 average doesn't give in, and then you make new all-time highs again. In this situation, you're making new all-time highs after you came from just a moderate correction. So after a correction that's grander than moderate, it amplifies the situation even further. So therefore, I am more apt on a random blind chart to wager when the price action gets here that it has a better chance of falling, say, down towards what I would state here, the 6120, compared to its exact same polar equivalent to the opposite side. And the opposite situation is, say, as it's coming here from this situation, I would expect there would have been a better chance to hit this area than this area, and sure enough, that would have been the case. So far, the likeliness is that this is going to make a move higher. In time, it's probably going to break this for a good gain. And the third thing is failed move, fast move. A statement has been made after this declining move and this correctionary play. Now you're in a what you do now, especially when you're make a move to the 18 average and you just stay within the band for several periods, 4 or 5 kind of deal. You neutralize the situation out. So therefore, before the big green candle that occurred in here, the play was either going to be what just happened, with the statement being this is a phony sell-off that is now going to resume the bear market, so that statement has been made. Or if it, of course, didn't do that and it fell through, then this would have been the case of resisting the market, coming back to where you go to in the bear market, doing what bear markets normally do. So the statement was made. It had a good push and a decent consolidation amount of time within this to suffice this enough as a very good, I've worked hard enough to do what I've set here to do. And if they're going to be accurate, they being the bulls, and the statement made that they're going to revert it, that means you expect a significant higher low to come in from here. Yeah, maybe this short term might come down to 6,000, down to the 18 average of lows kind of deal, and then continue higher. That's fine. But what I look for clues on the failed move, fast move, is it has to break a key level, which it did. It has to have a noticeable break above, which it has. Can't spend too much time up there, which means it's likely to break 6120 or break support within the next 2 to 3 periods. But a failed move would bring it back to this congestion area relatively quick, which it would not escape to the upside. It could spend a few periods within it. But then when you see within that period of time, whether it be immediate or within 2 to 3, 4, 5 periods, the price action breaks significantly below the lows, warning side, failed move, fast move. Of course, I showed the polar exact opposite with Bitcoin on the 4-hour chart. Thank you for tuning in, and have yourself a great day, great weekend. Bye-bye.